What's going on, y'all? Jordan the Maestro in the building, back again with another video. And what a week it was, y'all. What a week it was. Pretty choppy week, to be honest, in the markets, especially when we're talking about gold. US 30 was so this week. Still opportunities, though, to be made. Still opportunities where money was made. And let's go over it. Although not as many opportunities, but still opportunities were there for sure in the market. So let's quickly go over how things were going this week. So this week we were in a big consolidation, a big correction, however you want to phrase it, but we were in this correction for a while, and it's more visible on the higher time frame, 1 hour as well as the 4 hour. And this was textbook market structure over here. Okay, so ultimately a lot of the trades we take are usually going to be breakout trades out of supply, out of support and resistance. So usually when we see this, it's always good to know good market structure as well, because you can trade this via certain patterns in the market. Okay, and if we understand our patterns and how to read our charts, right, we understand that this was one big impulsive move downwards. This over here was a correction to that move, and then you got your continuation downwards. And there is definitely room for it to go downwards a little bit more. So we're going to see how that shakes up in the week to come. Okay, but this week there were definitely opportunities where money could have been made, opportunities where money was made, and opportunities that didn't work out as expected. So let's go over those. All right, so first opportunity that was identified was right over here. Notice how price settled in this area. Okay, price settled in this area and gave us a little bit of a double bottom. Okay, so price came. Let me just grab my tool over here. Price came, got to this level of support, and then came around and gave us that double bottom right over here, retested that level of support. And if you get into the details, the candlestick structure, okay, because this is one thing, all of this is one thing, but the candlestick structure is also important. Notice how the candlesticks are wicking as they get closer and closer to support, right? No actual bodies that are hitting support. You're getting the wicks that are hitting support, which tells you that this is still a very strong area of demand, and obviously buyers are in control as price gets to this area. So as price got to that area, saw it as an opportunity to take the buy. Wanted to take the buy to match this level of resistance up here, and that was successful. This was an overnight trade, I believe. That was very successful. Called it out in the signal group. We all profited. The next trade, next opportunity I saw was over here, which ended up being a loss. But let me go over the logic behind this move over here, okay? So in this area over here, we see that there's a resistance over here, right? And came back and touched that resistance right over here. So the thought process is, once price broke this area of resistance here, broke and closed, once price broke and closed this area of resistance here via this candle over here, then if we get that by our second candle, depending on how it's forming, of course, we want to enter that trade for the buy. And look at the amount of range we had on the left hand side. We definitely had enough room to come back up to this area over here. Okay, if you, again, this is if you're trading support, resistance, breakout. Now when we go down to the lower time frames, right, when we go down to the lower time frames, we see a solid close. So if we start from the 15-minute, we see a solid close from the 15-minute all the way to even the 4 hours. So this is a very strong close over here. Okay, so this candle, in other words, what we're saying is this candle closed above resistance on many time frames. So that being said, felt very confident in the move that it would continue going up. However, what we have to understand, and as we should always understand, trading is all about probabilities as well. Okay, as much as we have confluences and we have all of these strategies and all of these things to help with our win rate and help with the accuracy that we're employing our strategies. But still, there's no strategy that's ever going to be 100%. Okay, this happens to be one of those moments where that is not 100%, and that was okay because this was not an over leveraged trade. Always want to stick to the same trading plan, the same risk parameters, and took that loss. But I was not worried at all because I know 8 times out of 10, 7, 8, 9 times, even sometimes 9 times out of 10, I'm going to win that trade. Okay, so price came back downwards to this area of support, settled in this area for a second, settled in this area of support actually before it made its continuation downwards. And then I saw an opportunity. If we zoom out in this area, right, if price were to break this area, I saw that price was hovering around that area for a minute. So if price were to break this area, I felt very comfortable in taking a sell for a couple of pips down. Okay, so once we got that close from the first candle over here, let's go down to a lower time frame so we see a little clearer. So once we got the first close, I think it was on the 15-minute, we got the first close below that area of resistance. We entered on our second candle and then rode this downwards. Okay, so that was about 50 pips. I believe this trade was, yeah, about 50 pips, and that was it for the day. Friday in general was a little choppy. Didn't really like how the markets moved, so just left that alone. But ultimately, even in a choppy market, right, even in market where, you know, may not seem like that many opportunities, if you really focus on one pair, even when the market is moving like this, you're always going to find little opportunities like this. Okay, so that was gold. What do we see moving forward? Okay, moving forward, if we're talking about looking at things from a higher time frame perspective, let me now extend these. Let me remove some of these alerts, y'all. All right. So as we're getting ready for the week to come, this is what we're looking at when it comes to gold. Okay, you want to watch out for the continuation downwards. Very possible that we may continue to get a move downwards. Why is that? Because price has not broken structure. So again, as we are analyzing the structure, we have the impulsive move downwards. We have a large correction, and then we have a continuation. And what does price look like it's doing again? It looks like it's starting to give us a little bit of a correction again. Okay, and now where is our previous high? Our previous high is over here. This is our previous high. So long as this correction does not pass this previous high, this downtrend is still valid. So as a result, because it's maintaining structure, what we're looking for is the continuation of the correction, or sometimes the market may open and price is just ready to break down, and the correction is not as long as we think it will be, so we may get a breakdown there. But either way, I would definitely draw my zones over here. I see an area of support right over here, and if price were to break this area, okay, if price were to break past this area, then I would say we are good for the sell going down. Let's see where the next level is. The next level is going to be this area over here. Let me extend that a little bit. So this area over here. So definitely plenty of room for price to continue to go down. You could take a little bit of that. You could take a lot of that. But that's the next major level of support that we see that could give price some trouble, especially as it moves down. If that doesn't happen and price wants to break through and move up and at least match this area of resistance, then you do have an opportunity. If it breaks past this zone, right, let it break past this zone, let it give you a little bit of a retest, right, and then you can continue going up to this zone, I would say, at least. Okay, but that is for gold. Now for US 30, there was an opportunity Friday. There was an opportunity Friday that was capitalized on. So for US 30, right over here, we had this opportunity coming down. All right, let's go to a lower time frame. Coming down strongly, saw this little area, small area, not a lot, but small area of support that it was at. It was a small area of support, but really what it really was in a major area of resistance. Okay, higher time frame, we're in a major area of resistance over here, so I'm already biased towards the sell. And then when we go down to a lower time frame, we have a little bit of a support we have to break before we get confident and get into that move. So once this area was broken, once we got past this area and we got to the candle close, 15-minute, then we were able to enter that trade and then write this down. This was a little over 150 pips, and that is more than enough. All right, so that was US 30 for the week. Ultimately, what US 30 has been doing is hovering around this area of resistance for a bit, and we still want to see what it wants to do. Okay, so right over here, it went all the way down to this area of support, wicked down a little further, but the body's still closed at support. Now price is reversing, and what we want to look out for is if price is going to come back to that area of resistance up here. Okay, so look out for that. You may get somewhat of a retest before that happens. Don't be surprised if price comes back down to this area of support before it comes all the way back up. But that might be a potential move that you want to look out for. And of course, if price breaks down, then what we want to look for is I would feel a lot safer if we got past this area over here. So if we got past that previous low that it just formed, then I'd feel a bit more comfortable going for the sell. And even from this box to the next box, that's still a whole lot of pips when you talk about US 30. So yeah, you could definitely eat off that when you talk about US 30. Okay, so you want to watch out for those moves. But this area of resistance still has been holding very strongly. No reason to believe it's going to break it yet until it breaks it. When it breaks it, then we want to attempt to find our entry, find a retest, and then find our entry so that we could continue going long. Okay, but that is US 30. The last thing was a gap fill example that I talked about in one of the videos this week. Talked about how UJ is one of the pairs that my students like to trade a lot, so I've been taking more of a look on UJ. And one of the opportunities or teaching moments we saw here was right over here. So usually sometimes when the market is going to open in a gap, right? And what we mean by a gap, you see how there are no candlesticks over here. There's a gap. Usually when that happens, price tends to come back to that area at some point. Okay, it's not good practice to think that it's going to fill that area immediately, right? But it tends to fill that area at some point. So then you have to just find that opportunity on when it's going to fill that area. My advice on that is to use this as a type of confluence, right? So add this to your confluence bank. So for example, if you need a break of structure, like here, we got a break of that support area. We got a break over here. This other confluence is what comes into play. Oh, we also have a gap to fill. So this might be another confluence for me to take that sell, and that should be definitely a good move to capitalize on. Still 85 pips, great move. Okay, but you want to watch out for those things. When those things happen, they tend to happen once the market opens after a weekend, right? So you want to watch out for those areas. That's a little tip there. But you don't want to sell immediately or buy immediately just thinking that it's going to immediately fill the gap. It's going to come around more than likely at some point. Just be ready for it, add it to your confluence bank, and then you can execute on that, right? But that is it, guys. That is it. Those are the pairs we are looking forward to in the week to come. Let's continue to trade safe, even in a choppy market. And this is the last tip I'll share with you guys. Even in a choppy market, this is the beauty of focusing on a few pairs, because even in a choppy market, you know how to identify those opportunities, those smaller opportunities that maybe somebody who trades a whole bunch of pairs wouldn't be able to identify, right? That comes with very, very keen focus towards one or a few pairs, okay? So continue to find these opportunities, guys. Be patient. If you don't see a setup, don't trade. Don't force it. Don't feel like you have to trade every day. And then if you keep those in practice, then you should see major improvements in your trading. All right, y'all. So I hope you guys enjoyed this video. Jordan the Maestro. Take care.